How are you guys doing today? Today is Tuesday, May 4th. I had to check. May the 4th be with you today. It was a red day. It was a little bit more bloody. But again, this is what I want to point out to some people off the bat. Is that even though it was more of a red day, when it comes to the sectors, these are not an accident. Materials, which I said last Saturday, makes some sense, if you recall. Financials, again, all month, I've been like, this looks pretty good. Industrials, I was not sold on, still doing fine. Healthcare, oh, look, it's doing good. Energy, doing just fine. Utilities was down, but again, it's better off. And even then, real estate's good. COMM is the third worst. Discretionary, again, this is also tied with technology, which is also doing the worst. Now, interesting enough is that when things do bad, they also have the most room to run up. So again, I would definitely be prepared for some technology plays that kind of come alive soon and some other things. But again, my Saturday shows about sector rotation have some validity. I'm not perfect. I'm sure that some days technology will be the best, and the ones I like will be the worst. It's on a micro scale, right? But again, if you're new to these kinds of things, you're like, what the hell is this guy talking about? Who's this guy? Like, who invited him to this party, right? That's a good thing. I'm here to show you and answer questions you never even thought about asking, right? There's plenty of folks who are like, let me tell you about Dogecoin and why Dogecoin's not going to go to the moon. Boop, 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 boop. And all they try to do is get clickbaits. If you want to learn how to trade properly, this is where you want to be. If you want to have somebody who has tangible picks you can actually look at today, compare my charting to, and maybe make a play off of, that's me. Then also the educational folks. I have a degree in education. I get paid to teach people every day. For real. You take these two things, you put them together, you have my channel. Not many folks can claim that, do that, or do it better than I can. All you beginners out there, all you newbies, all you little greenhorns, all those little baby paper hands. Ooh, I'm scared, Mara Riot. Ooh. If all you do is trade the same 5 stocks, I'm going to show you some diversity and some different things to check out. Supports, resistances, trend lines, patterns, EMA lines, volume profile, RSI, stochastic, vortex. All 9 of these things. I have developed myself a convergence system that comes together, shows you good picks. You can enter based on a crossover or off a value. Then you have your own validation process from there, and you become much more successful with this system. I'm not here to tell you how to trade, what to buy, when to buy. I'm not an advisor. I'm just here to show you, document what I see, and go from there. I do this almost 80% for myself. I hold myself accountable through this. If you find and learn new things, fantastic. Also, if you also enjoy a refreshing drink, why not consider White Claw, strawberry. Because truly tastes like shit. So with that being said, 3 things. 1, if you enjoy this kind of content, like, subscribe to the bell notification. If you're sick of clickbait with folks doing this and having dumb thumbnails, stop watching them and come watch somebody who actually cares about you. 2, I have a Discord. It has about 350 people in it. We're having a great old time. It's a great old name over there. We have a good old time over there. You want to come join? Great. 7-day free trial. I don't sell shit until you want to try it. I don't want to have anyone buy it and hate it and then quit and be upset. 7 days free. Down there. Look at down there. Add me on Discord. I'll respond. You can get a free Discord chat, free Discord help. You want to just message me like, hey, I like your stuff, but I'm confused on this. Can you help me? Sure. I'm just here to help. That's fantastic. But again, free days for you want to try it. Thirdly, I'm so serious when I say this. I want White Claw to be my sponsor. I have no reason why. I bought a 24 pack. They're pretty good. Pretty good. I like it. And so instead of me waiting for, I don't know, TradingView or like MeUndies. Again, I do wear MeUndies. Shout out to them. But instead of having to wait for you to get like 100,000 subs to come find me, I'm gonna go bring this to White Claw's door. Until this 24 pack's gone, until I drink all these, do me a favor. I'm so serious. Go on Twitter or Facebook, find my account at Fifth Third Trading, retweet when I talk about them. I'm so serious. I want to see if I can get us sponsored with White Claw, my boy, because Claw is the law. Claw is the law. Truly, you're out of here. You're done. Your tea sucked. I'm sick of it. White Claw to the moon. White Claw to the moon. To the moon. With that being said, 8 new picks today. If you enjoy a man rambling about White Claws and stocks, they're the right spot. With that being said, let's get into it. So today we have 8 new ones for you. Now I've called a few of these before, but they're coming to value, and that's really the beauty of really doing this the correct way and taking your time, because when you have a great master watch list like I do, of like 400 to 350 stocks at any given time, sometimes closer to 500. And you can see there's a bunch of red on this today, but there's also a bunch of green. A few of these we've called before. Like, I mean, I had ARNC, you know, was watching it, took off. UFS, I was watching it, take off. It didn't get to value yet. X, I was watching it, it took off. This is one that I wish I would have called. I was waiting for it and I missed it. Some, I've been watching for the triangle, broke out today. So there's a bunch of these that I watched that I don't talk about. AR is doing it again. They don't, Hunt I called. So there's a bunch that I've been watching that do just fine. There's also players that don't do very well. SDC, we used to play a bunch. You know, we actually made our money off of it, and it died. And then, you know, Sedge, we made our money off it, and it died. H-Lit, we made our money off of it, and it died. So it's a good rotation thing of like, hey, this stock did well. They broke price structure. Let's find some new ones. And that's today's mission, is to find some brand new ones for you. So first up is AES. Where are the lines? Oh no, where are the lines? Again, that's show business, baby. Same joke every day. So let's do them together so you guys know what's up. So we have our first support area. A clear one is right about there. Right, that's a really good support area. Support, resistance, wicks, resistance. You know, this is a good spot. And our good resistance spot's probably going to be, I mean, this is a clear one, right? But that's too big of a channel to play off of for a swing trade in this kind of market. I would say this is probably your best resistance area. Now, does this support work? I think it works just fine. I do think that putting it a little bit higher and saying that this is the support area kind of in this zone is also fine. But given that it's still red and there's earnings, I'm going to go with right here, right? I want it to kind of come down to me and do its thing. Orange lines are going to be resistances. Your white line will be your support. Our trend lines are going to be golden. Come down here all the way up. Look at that. BEA, beautiful. Now, I think a better trend line, because this only hits twice, would be this one. Once, 2 times, 3 times, boom. Once, twice, 3, 4. And maybe 5 right here, right? That's what you want to see for a good trend line. I make them in channels to get some extra moves. You know, you can put it up here like that. That's too big. You know, putting it like this, the size of the candle is always a good justification. It gives you like some built-in ATR, average true range, for this candle and for this channel. That looks really good for a buy-in zone. Now again, support and the channel are not together, so you got to play out the support where you put it or the channel. It's going to be dealer's choice. Last thing that we always add is our volume profile, which is going to be where 70% of the volume happens, which is right here, right? This is the yellow line here, and then down here. This is where 70% of all volumes happen for AES. Now, is it good or bad? You know, there's different things you can think about. It's a B shape, which is bullish. But our POC is down here. I'm sure this will shift up in the next 2 months because this will all be gone. And it should be up here, which is a good sign of strength, right? And we also have our POC, which is gravitational, kind of acts like a planet. If you get closer to it, stronger gravitational force. Farther away, it does get weaker. So this is down here, but some plays will be closer, and we'll talk about that when we cross that bridge. But for now, it's not very relevant to this play we're going through. But AES, looking beautiful, looking really good. I see no resistance trend line besides this horizontal one up here, but again, it's not the most relevant. Last thing that we do is we add the ticker, so I don't forget when I take screenshots, folks, and see what I'm talking about. So AES is a utilities company. Utilities, so far, has been doing fairly well. I mean, it's not exactly the greatest, right? But you can see utilities. Okay, it's pushed up, come down, you know, it's doing its thing. Utilities has not been a dying sector. Like, that's technology. Womp, womp, womp. No, but not too great. And comm services, I also said, is going to probably shit the bed, and wouldn't you know. So, AES is in a good sector. It looks pretty good. I like where utilities are headed for the sector rotation. This wick is really weird looking, probably an options thing. But look at it. Great channel up, great support play. We were trying to get the ascending triangle play. Higher low. Higher low. Look at that. That's still a higher low. Higher low. Higher low. This is really weird. Doesn't really count. Higher low. So it could reverse anywhere between here and 25 bucks. If it does that and reverses and shows life, that's still an ascending triangle. Now, it's not perfect, but still pretty good. AES, a gorgeous ascending triangle setup. You can easily see a 8% return. Maybe you're going to risk your buy right here. 2.5%, 3%, 3-to-1 ratio. It checks out for me. I like it a lot. Let's check the indicators. What's really cool about my channel, besides me and, of course, White Claw, Strawberry, Ride the Claw. Tastes like sponsorships. Besides the obvious cool things like my hair matching my shirt today, is I don't check the indicators. I have no idea what the 10, 50, 200 EMA lines are doing. No idea. No idea what the RSI is doing, the stochastic or the vortex indicator. All this will be live with you guys. You'll see what I see while I'm doing it. And again, that shows you some really good insight on how I use indicators, how they're not more important than price action, but they should always encourage or discourage my decision moving forward. So off the bat with AES, we can see that the 200 EMA line is where it's going to be mondo good deals. We can see it cracks the 200, it comes back. Cracks it, comes back. Cracks it, comes back. Cracks it, come back. So you have an option here. Under the 200 is obviously a good deal. I would argue so far historically, it's almost always a good deal. Now, does that mean it's going to be perfect? No. But you have options. One, buy into value. You must determine, not me, where value is. Second, you can wait for a crossover of the 200 EMA line or your chosen EMA, SMA, or EMA line, MA line, whatever it is, for an entry. And so if right down here, do you think this is a good value? Think, AES right here is a good value? Great, go for it. You want to wait for a crossover back over the 200? Also great. Either way, your whole entire goal overall isn't to really find the perfect entry. That's never going to happen. Your goal is to have good risk management. If you think that this is a great value and your stop loss can be 26.45 or so, and you're letting that run, great. You want to cross the 200 and put your stop loss at 26.80, great. But again, the whole entire purpose of finding value or a crossover is risk management. But again, the 200, great value. I like where it's at. RSI, almost 30. 33 is a great spot. It reverses plenty in this area. Great sign. Stochastic could be lower. Okay, you want to see stochastic negative 40 usually for a really good deal. But again, it's going to curl soon. If it shows some life, that's great. I don't off the bat see any divergences. Of course, this big stupid thing's really throwing the whole entire ticker off. I mean, you could definitely say that this is like right here is becoming one, but that doesn't really count. But again, negative 40 or curling north, you're good to go. Lastly is that the vortex is consolidating. It checks out, right? We got all this action here. It's going horizontally for a very long time here, almost a month. So going horizontally kind of leads to the vortex being a bit confused. So do I like it? Yes. Is the sector good? Yes. Is it an easy read? Yes. But again, the most important thing with the show is that I'm just following watch lists and giving you guys ideas. You must do your own due diligence, do your own charting, do your own investing. I'm not a financial advisor, just a guy who is hopefully going to be sponsored by White Claw Strawberry and hopefully going to help you guys find some educational tools. So AES, I like it a lot, but I want to see some life or a slightly better deal moving forward. Next is COMM. I love when a stock starts the day and then ends the day at 0.00. It's super interesting to me. I don't know how that happens. Like, what are the odds of that happening? It's weird. So COMM has a great trend line. Okay, once, twice, 3, 4, and again, we're trying to get close to 5 or 6 times. Again, any one of you idiots, any one of me idiots, can draw a trend line from one spot to another. 2 spots is not a trend line. You can anticipate the creation of a trend line. You can anticipate the creation of a resistance trend line. But until it's 3 hits, it's not a trend line in my book, boys. So this is a good looking trend line, looking really strong here. If I'm going to go from this spot though, I must have the resistance trend line come from certain spots. Either here or here. Traditionally, this is where they'd come from. Now it's obvious that that's not going to work. I mean, you could have came from here and you actually would see you'd have pretty close to having 3 hits off the bat, boom, boom, boom. But seeing that it's really part of a larger swing movement, you can either come from here or probably from here. Those are also fine, right? And with that being said, it's obvious that our channel would come from here. Boom. Once, twice, 3 times, 4 times, and now it's not reaching. Now this is kind of it's kind of looking like it's starting to wedge a little bit. Let's duplicate our trend line really quick and just double check. Yeah, you can see it's definitely not holding up any shape. There's no point down here connected to that would then connect to all these. So we can see it's definitely making some form of a channel or some wedge up. It's still very bullish overall, but again, we have to be careful what kind of pattern we're going to dictate this as. This is a very strong support area. Previous resistance became a new support. So I think your best bet to buy in, 3% away. $16, man. If you can get down here, if this does tank another 3% right into the zone, you can have a really, really good risk management setup because it breaks everything. You break this, 2%, get rid of it. It breaks this gap and fills this gap and doesn't reverse, 3.5%, you get rid of it. Earnings are coming, so again, be cautious. You can see crash to earnings, ran it up. Crash to earnings, ran it back up. Maybe you see a crash. If that's the case, go for the horizontal play. We'll watch it then. But COMM, COMM, makes a lot of sense, leads to watch list through earnings and into next week. Let's check the indicators. Off the bat, once again, we can see it bounces off the 50. Boom, boom, boom. Likes to bounce off it. It also likes to find value at the 200. So you want our value play. It looks like you may be coming down to the 200. And again, it may consolidate sideways. and do one of that, and the 200 may be right there, and it kind of converges over there as well. So you got to see what's going to happen. It is converging down here on the 50. Again, it has no real, no direction right now. I'm sure that the indicators, again, will show that as well. So when it comes to the future movement, earnings is going to be what dictates that. If earnings are good, it's probably going to go down. If earnings are bad, it's probably going to go down. That's how earnings have been going. So again, be careful with this coming up. If it's consolidating with no real life yet, I would be a little bit concerned. I'd wait to really make a good entrance on COMM with that kind of information. RSI is fair, Stochastic's fair, and Vortex is fair. Again, this one's definitely consolidating. I have no idea which way it wants to go. None of us know which way it wants to go, right? But all we can do is plan for both directions. Given the opportunity cost of other stocks being better or worse, I would assume COMM will be good after earnings. May will be run up to earnings, but given the market, I would definitely look for something else in the meantime. But COMM, watch list it. See if there's a let's see if there's a run up. If you hold above the 50, if we do crack this 50 and hold, again, you mitigate your risk. You can come up 2 or 3%. Stop loss below the 50. You may have a good play there. But again, I want a better value, or I want some sign of confirmation before I go long on COMM. So next is KNDI. I have called KNDI once or twice now. The first thing you're going to notice is a fantastic horizontal play. Now, what's crucial for beginners, go to the 10-year chart. Can KNDI get lower? Yes. Is this foolproof? No, not at all. KNDI has had a history of being towards the 4s, towards the 3s, and even towards the 2s. So I think that this is a perfect little support area is invalid for sure. But given this price action, this is a very, very strong support area. Folks are deciding, bulls are deciding this is a great place to buy into. I'm sure if I pull up the volume profile, it'll be a perfect D shape. Wow, who knew? Well, it's actually a B, but that's more bearish. But again, with this kind of support area, I'm less pertinent to include this in the information. This is a nice D shape. The POC is gravitational above it. That's a good sign. Who's going to short this? Not many folks, minus fundamental news. Who's going to buy this? A lot of folks going off of technicals. So, I mean, it's a great technical setup. It's a great technical hold here. But again, it could be a lot like FSLY, this one mentioned. You know, you have a great technical support area. It can still break, right? IQ, you know, again, it's holding, doing okay. And even something like CGen before had a great support area that then broke, making a new one. So I wouldn't get overly convinced that your horizontal plays are the best, and that's kind of why PLTRs and CCIVs don't do very well, is folks just see a support area and go for it. So KNDI, do your fundamental research, make sure you know what you're talking about. But given that we have our earnings call coming, if this is good, you can see a massive run up again, run up to it, ran up to it, crashed, recovered. So we'll see some volatility. Hopefully the volatility is towards the green side. You have a good stop loss, but KNDI could be huge, but again, it is more volatile. You need to have a stop loss. So off the bat, what I'm saying with the email lines is that the 50s being a real piece of shit, if I'm being honest with you. This is what the problem's going to be going long term is until we get above the 50 EMA line, we're not going to have massive growth. Your short term price target should not be really that far above the 50. So I'm probably being a bit bold here because I called before I kept these on here. I probably want to go probably towards here. Right? That's probably a good call and a short-term price target. I mean, with the 200, it has not been above it in about 3 months. Right? So I think that my price target long-term should be like up here. It's a bit ridiculous, isn't it? So I think right here, you can try and get yourself 10, 12, 15% pretty quickly, get in, get out. Makes more sense than not. RSI, dummy low, exactly where you want it. A lot of reversals happen at this area. Now again, you have been faked out before. Fake out, So I wouldn't get overly convinced. Fake out, you would have, you would have made money. But long term, would have lost money. So again, RSI checks out. Stochastic is low. That's good. Bulls low, bears high. It's what you want to see. But again, given that's just a support play, KNDI needs extra fundamentals, extra due diligence. And with the 50 being a resistance, make sure that your technicals make sense and the fundamentals do really check out before you buy into it. Next is LSPD. What's beautiful about this is that the trend line is working as a line more than a zone, which is really nice to see. Now, this is a very long one. I wouldn't consider this all that important, but even here, this is still a nice looking trend line, a nice rising little trend going on right here. We can also see a possible triangle, which looks checking out very well here, also is forming, making a nice horizontal triangle. We like to see horizontal triangles for the consolidation feature. When a stock is moving, it does 3 things: consolidate, ascend, and descend. Consolidations is usually what's going to precursor come before a big move. And so if we can get in on the right side of the move with a proper stop loss in case it doesn't happen that way, we can really print some money and do well with horizontal triangles for sure. LSPD here, if it is a triangle, again, let's mitigate our price target to being short term. Right here, let's say it keeps running up and hits, you know, maybe you get 7 or 8%. Up here, you're risking about 4 and some change. So again, if you don't think it's going to break out, this is probably a more risky call given that there's lower highs across the board. What should be somewhat encouraging though is that we do have a higher high right here. And even though this didn't make it all the way to the top, this is consistently higher lows looking really good. To think that we can't get back up here in the 80s eventually is foolish. I think we can get up there, but short term, I wouldn't plan that kind of intense movement thinking that it's going to be the kind of volatility you're going to see, you know, regularly. You can see one of these for sure, but I think going for 5, 7, 10%, hit the POC, get out, take half your profits, trading stop loss makes a lot more sense. But this support and trend line is very, very clear to everybody. I like it a lot. Let's check the indicators. Off the bat, the first thing that I'm going to notice is that the 50 and 200 EMA line are directly in the middle of this triangle. Is that an accident? No. Was I an accident? Yes. No, I'm kidding. I don't know. That's my parents. But when the EMA lines, the 200 and the 50, are in the middle of a horizontal triangle on the 180-day time frame, it shows consolidation. It shows that your hunch that there's a triangle happening is probably much more true. So that's a really good sign right there for a consolidation. And again, these will be resistances moving forward. You may get up, you know, to about 67 and some change, die and come back down, making a lot less risky of a play. That'll be a good, you know, buying right there. But again, the hunch of this being the triangle horizontally is checking out pretty well with the EMA lines. RSI, it's low. This is where you want to buy into it. You want to probably get in at oversold, but it only happens once every 6 months, it looks like. So down here, looks good. A clear deal going on. No bullish divergences. This is lower. That's a little bit higher. Checks out, but again, negative 40 curling north. That's what you want to see. Bulls, they can be a little bit lower, okay, and bears can be a little bit higher, but again, it's consolidating. So not to have the perfect setup is fine. Price action wise, this makes a lot of sense. It makes the most sense a bit cheaper, about $1 or $2 cheaper. But again, LSPD, a great setup. At least watch list it and see what it does later this week and into next week for sure. So next is MXIM, MXIM, looking good. MXIM Integrated Products, MXIM, what's up? So this is a really good, again, ascending triangle. Big move up, higher low, big move, higher low, big move. So we're trying to get this consolidation. We have higher lows, the same high. So again, that's a really good sign of strength. Bulls have all the power, pushing it higher, 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 higher. What are bears doing? I want to control that's 97 range, right? If we can push up here, maybe a good 4 or 5% push, break this or consolidate and take off, that's going to be the move. We can push all those stop losses out, get them move out of the way. Not like a short squeeze kind of thing, but it'd be a really good play nonetheless. Super obvious support area. And again, your support area may be a little bit lower. You may be like, well, mine's actually going to be down here. That's valid, sure. If you think this is a horizontal play developing and this is still coming down to like 87.40, great, go for it, play off it. But I think it's nice that I made this trend line 4 hours ago and it hit perfectly and lived. So that's pretty nice. More risk because it showed some life, but again, maybe it's crossing an email line to give us some form of confirmation. But overall, a great looking setup, low risk, you know, medium reward. I do like it a lot. Let's check the indicators. Off the bat, Chef Boyardee Swing, sponsored by, no, I'm kidding, but Chef Boyardee Swing, delicious. This 200 EMA line, look at this convergence. 200 EMA line, trend line, support, volume profile line. You see this right here? Right here, look at this. This is what my dreams are made of. This is what I go to sleep to. Support, 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 support. Mental, emotional, physical, and spiritual support. Looking good right there. That's why it's surviving. That's convergence in action, ladies and gentlemen. If it holds, I'm a genius. If it dies, I'm going to look stupid. But that's a really good setup right there. I like that a lot for support with the EMA lines. You know, RSI, it's low. It reverses in this area plenty. That's really good. Stochastic is dummy low, showing some life. It looks really good. Any kind of divergences? Not really. You can see it checks out. Looks like they're all pretty equal right here. But again, negative 40. You have all this room to run. Right? This does make a move. It'll probably break up to about the resistance line as we want to see tomorrow. MXIM makes a big move up. That'll be great. Bulls, low. Bears, high. MXIM, it checks out every box. Right? The only problem is, it's a good problem to have, is that we're a little bit high up here. Right? I think some folks would actually probably buy, if this was coming down still, they would probably consider buying MXIM, you know, to get into this move and not miss it. So I think that's a good sign that we have some confirmation of a, you know, reversal happening a little bit. But again, more risk, but that's okay. MXIM, I like it. Watch list this week for sure. Next is NFE. What's great about NFE is that this is a stock I was watching over here. I did this. I was watching like this, and I was watching this triangle. I called it here. Then it made a big, nice move up. Boom. I called it again. Nice little move up. Boom. And then I broke it. Instead of being discouraged that I got burned, I switched my charting. I reset everything. And here we are months later, ready to play it again. That's how you properly chart, how you keep a watch list. You keep your wits about you and you don't be emotional, right? I know NFE, I won twice, lost once, but again, let's give it a shot. Once, twice, 3 times. This is a really good looking triangle. Look at this coming down. Now this isn't perfect, a little bit more muddled, but again, the wicks, you know, that doesn't hold there, so it's fine. It's really showing lower highs and higher lows. We want to get a nice breakout here. Great convergence spot. Support is holding well. And again, you got to draw your own support. You may be like, well, mine's actually down here. And this is valid. I think if it does come down further, right about here, it's a great support area. Let's keep it there. I think it's great. If it does come down further, hits here may be great. We do have earnings coming. Let's check earnings. Shit the bed. Earnings ran up. So it's a mixed bag. You're probably going to get a big volatile movement. I would definitely have a stop loss for NFE. Even if you don't want to go off my charting or anything, having a stop loss with earnings coming is going to be so vital to your support and to your success. NFE, if you can get in maybe like $40.25, run to the trend line, 30 easy percent almost. Even the first resistance is 11. It breaks everything. You got it at 3. A 4 to 1 off the bat. It makes a whole lot of sense. Energy stocks, again, you got to do it. I think it's actually in the technology sector. But energy stocks overall have been doing just fine, doing really well recently. Let's check the indicators. So again, this is an Evan exclusive, a fifth year trading brought to you by White Claw. We can see that this triangle, support, resistance, where the EMA lines, dead smack in the middle. Again, when the EMA lines show consolidation, they're going horizontally, and you have a triangle, that's a great setup for a breakout. But once again, do you know the direction of the stock? Absolutely not. I have no idea if NFE is going to go up or down. With earnings coming, it's going to get volatile. Now again, a experienced trader like myself and you, if you are more experienced, would welcome volatility. So again, you have a stop loss, have a plan, but that's a good setup to make some money quick and hopefully painlessly and easily. So I like that a lot. They're going to be resistance moving forward. You know, break above the 200 seems to be kind of a hassle sometimes, but again, even to the 200, 12%, not a bad worst case if it does move up. We have our RSI. It's low. It could be, you know, 3 pips, 4 pips lower. It even gets oversold sometimes, but again, that's a very good deal considering that it gets overbought quite a lot throughout this whole entire stock's history. You know, the stochastic is low. You wish it was lower, just a little bit. But again, I'll give up stochastic to have the bears where you want them and the bulls where you want them. So NFE, 9 out of 10, especially if you're more experienced. But I really like that it's showing this kind of life. 10 cents dividend, you'll take it. You give 100 shares of that, 10 free bucks. You invest $4,000. Not bad. I like it a lot. NFE, good looking stock. Do your research, but I think it has a big potential moving into this week. Next is NXPI. What a gorgeous move. Again, this is what I want to highlight really quick. You see where I drew these trend lines from? Your support and trend line is from the swing low, and your resistance trend line is from a swing high. From the same movement. You see someone charting like this, coming over here and doing that, it is a valid move. Okay, but then your swing trend line must come from here, 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 or here, right? If that's not how they're doing it, it's not wrong, but to be the most accurate, that's such a small tidbit. No one discusses, but again, it will increase your charting success tenfold if you didn't know that. As of right now, it's a broadening wedge. We have a broadening wedge like a megaphone, like this. What it's implying is that eventually, this supporting trend line or this resistance trend line will not be hit again in this pattern. Now, most likely with a bullish market, which I know some folks are freaking out, but let's be real here. I drew this today. You see the direction of the market? It's getting up there, okay? It's still going. All right, we're still going up, okay? If we're going to have a broadening wedge set up, most likely the resistance trend line is what's going to break. The supporting trend line will most likely not break. So, with that being in mind, a possible triangle is forming, right? We're going to keep the supporting trend line as our go-to, probably going to keep going, but this may break soon, and we'll adjust accordingly. With that being said, this support area is very nice, right? Old resistance, new support, new support, new support. You'd love to get in down here, but again, you're going to lose a channel then. I don't want to have that happen. We hit directly at the bottom of this channel. I didn't change this charting, by the way. I've had this for weeks. It came down, hit here, and it showed some life. This is a good buy-in spot. Earnings overreaction. It does this before. Oh, earnings overreaction. It ran up. Earnings overreaction, and it came back up. Now, am I saying it's going to make a full move like 12%? No. 5, 6, 7 the POC? Sure. But NXPI, do your due diligence. Semiconductors, again, this is a big deal. There's some big players in this. You know, TPC, for example, if I remember correctly. Are they also semiconductors? Oh, I think so. Called it, right? So keep that in mind. We're taking on more risk to be at the top of the channel. You're risking about, 5% if you're really bold. But again, if you want to do a support play, you'd hold that and be just fine. NXPI, I like it a lot. Good volatility, good history. Let's check the indicators. Does it break the 200? Yep, off the bat. Broken. One thing to mention that may be a bit concerning, and again, this is more of a preference thing. I don't like to see it break it harder as of recently or as often as recently, right? It, tap. Took its time. Boom. It doesn't break it historically 5 times in 4 months. So again, that may be a slight sign of kind of more of a consolidating angle, more of like its kind of trajectory is going from being like 30% to like 25 or 20%. So keep that in mind moving forward. That if it breaks the EMA lines more often than it used to, price strength may be dipping, but again, that makes sense when your stock is over 60% more expensive within a year, right? That's logical. Do you want to wait for 200 EMA crossover? Sure, but I think the 50 may be a problem. Wait for that crossover, great. This is a good value. Either way, have a plan, write it down, make sure it's ready to go. RSI, dummy low. Stochastic, dummy low. I see no real divergences. This looks fine to me. I guess you could say that like it's kind of a stretch, but from here down and from here over is a straight line. So again, that is a divergence, but I wouldn't put too much weight into that. But again, negative 40, curly north, love it. Bulls low, bears high. It checks every box, especially if earnings wasn't terrible. If earnings was just fine and it's just like a bunch of overreaction, it could be a really good play. NXPI, do your due diligence. Make sure you know what semiconductors do. Make sure what their market cap is. All those kinds of things to make sure you're successful. But NXPI, watch listing it makes a lot of sense. So last and not least, this is probably one of my favorite plays. I actually called it right over here. I remember I called it because I was so hyped when I saw that Texas Instruments has a whole entire ticker. Man, that is insane. Do you remember when you were in high school and you were doing math? Because I mean, I don't do math. I'm not good at it. You remember when you got your calculator, you're like, yo, bros, check this out. And you gave your friend that calculator and you were like, your Texas Instruments, you drew one of these bad boys? Yeah, we all remember that. Texas Instruments is who made that. So if you paid $100 for a calculator, let's use them to make at least $100 back, right? That's the logic to me. So Texas Instruments, a super consistent ticker. It's really following the S&P to like a T almost. It's actually kind of weird how similar these look. And again, it ain't perfect, but that's kind of weird, isn't it? That like a calculator company is following the exact same setups as the overall market. Interesting. It also lost less and made more. So again, you could buy all Texas Instruments and outdo the S&P probably. Keyword probably, don't see me. So do I think this is a good value? I do. I think your best possible bet is 2 or 3% lower. I think this is a great channel to buy into. It's still coming down hard from earnings. $1 dividend is pretty nice. So it's really coming down hard. I wouldn't really put too much weight into this until we get about 175. But a full move, which it does, will net you about 8 or 9%. You're risking about 2 or 3%. It makes a lot of sense. And again, if you're bullish on the whole market, which until we have evidence that we shouldn't be long term, until we have lower lows and lower highs on a macro scale, there's no reason to be overly bearish. If Texas Instruments follows the S&P that close and outperforms it and also loses less, it makes a lot of sense to kind of put some money into Texas Instruments and stocks like it moving forward, right? Makes sense to me. So I like it a lot. Let's check the indicators and see if there's an EMA line above here, but this looks like a really nice setup nonetheless. Does it break the 200? It does, and down there is where you're going to find your best value plays. Now again, barely breaks it, barely breaks it, barely breaks it, big break, big break. Again, that should be a bit of a concern, even if it's just in the back of your mind, like it shouldn't do this as hard and as often as it used to. But again, at this kind of angle, tapering off does make some sense. So this is a really good value off the EMA lines. Waiting for a 50 cross, not a bad idea, but that's 4% later. And given the trendline resistance, not a lot of risk. I don't love that play, but the 200 should be a fine crossover, but I think value is the play here myself. RSI is low. Overbought, 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 overbought. Again, consistently gets to above 70. You're at 37. That's about, what, 33 pips? I'm good at math, dude. To run up. Plenty of room. Negative 40 on the stochastic. Plenty of room to run up. Bulls low. Bears high. Texas Instruments. They robbed us, people. Math robbed us of $165 to do algebra. Isn't it about time you stuck it to them and you bought their product in the form of stock and got your money back? I think so. I believe wholeheartedly that we should all buy TXN and get our money back. Just kidding. Don't do what I say. Do what you think. But that's just a joke. TXN, a great technical setup. I like it a lot. I would love to have the justice to get my money back from them through investing in them. It would be funny to me and only me. With that being said, 8 tickers today we've run through. Now, again, it's more tumultuous, right? As we get further into this, we're going to have earnings, which I don't like a lot. Now, there's plenty of value to be had, but my system kind of thrives on melt-ups and moves up. And again, when we have some drop-offs, I know how to short properly, but earnings does throw some kinks into some things. So again, it's not the greatest to swing trade with, so be careful choosing your spots more carefully. 2, we had that pullback today. Look for value. The main thing that separates experts and veterans from noobs and greenhorns and paper hands is when the market's dipping, it's a mindset thing. When the market's coming down, what are you doing? If you're wasting your time complaining, if you're on every Discord, every Facebook group, you're like, why are hedge funds attacking me? Boop, 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 boop. And that's what you spend your whole day doing. You're actively not getting better. It's almost like when you have a sport or an instrument. Do you have to have a basketball in your hand to get better at basketball? No. Studying film, researching different techniques. You can sit here and just do this all day. That's what I used to do. Right? An instrument. Do I have to have an oboe to get better? No, I can study film, read sheet music, watch documentaries, and learn. Same with trading. Do you have to actively trade on red days and make money? No. You can make plenty of progress without trading. Scanning, journaling, charting old charts, make sure they make sense. Researching, reading books, right? If you're going to take your whole red day and complain, your success is being mitigated by your negative attitude. And I mean that from the bottom of my heart. The more you want to be negative, the more you want to complain, the more you want to be like, it's not fair. Well, guess what? You need red days to find value. If every stock went up forever, it wouldn't be real. There would be nothing to do. Everyone would just cash out, and then there'd be hyperinflation. We'd all be poor, right? You have to have red days. And the way you capitalize and plan for red days is what's going to separate you from being a beginner and an expert. Take my advice or don't. It's up to you. It's not really. It's just life lesson, honestly. If you have your hardest days and you're not learning something new, it's going to be on you. With that being said, 8 great tickers. Watchlist them. Check them out. If you enjoy this kind of content, like, subscribe, hit the bell notification. I appreciate you. Have a good rest of your day. And of course, always, White Claw over Truly, because Truly is for idiots. Big facts. I appreciate you. Have a good one. I'll talk to you guys later. Thanks.